This is Gary Goldberg. I'm the CEO and President of Newmont Mining. Newmont Mining is one of the world's largest gold mine operators with operations on 5 continents, a little around 16,000 employees, and produce around 5 million ounces of gold per year. It's been a little over 3 years ago since I took over as CEO of Newmont. Yes, well, when I joined Newmont about 4.5 years ago, I think was about the peak in September of 2011. I joined in November of 2011, or actually December of 2011, and it had gone down ever since I joined, basically, until earlier this year. I've been in the mining industry now for 35 years, so cycles have been a part of what I've experienced in other industries. Gold was unique. We hadn't seen a downturn in 12 years, and the key for us was making sure the business was positioned, really from the time I took over as CEO, focusing the business on value instead of volume. We really looked at several things. One was making sure our underlying portfolio was performing well. We went out across all of our operations under a structured program we called Full Potential to look at ways to reduce costs and improve efficiencies. And from a 2012 base, reduced about $1 billion in costs and improved efficiencies. The other thing we did was look through the portfolio and what best fit, what projects were the ones to invest in or not, and we sold $1.9 billion in assets. We used the cash to help pay down debt to strengthen our balance sheet going forward, and we continued to invest in our people and training in people going forward. I think the big thing that contributed to that large reduction in all-in sustaining cost was our Full Potential program that took out the roughly $1 billion in costs. We also got help with tailwinds from lower oil prices and an improved Aussie dollar exchange rate. Well, I think to have the burning platform, so to speak, of prices going down always helps. People understand there's a business need and imperative to improve the business. I think the other silver lining, or golden lining, I guess in our case, certain competitors had issues as prices came down, and it created an opportunity for us to acquire Cripple Creek and Victor last year from AngloGold Ashanti, who needed cash to pay down their debt. It fit well in our portfolio, and we were able to come up with a transaction that made good sense, and it's now part of our portfolio going forward. Well, we've seen it pop up here a little bit earlier this year off the back of higher investment in ETFs. We still see good demand for gold in China and in India, and see that over the medium to long term as being very good. I think you've seen a decrease in supply that's occurred as there's been less investment in new properties. I think we've been one of the few. We're building 2 brand new mines in our portfolio, Marion in Suriname and Long Canyon in Nevada, 2 new properties that you don't see other miners doing. Overall, we see gold supply dropping by about 7% by 2021. I think there's a number of things. One is just doing the basics of technical things properly, and where we've been very successful is how we model our ore bodies. Gold is very variable by its nature, so understanding those differences and where the risks are in each of our ore body models at each of our mine sites. We've gone through a very rigorous program of understanding those risks and then putting in place things to reduce it, whether it's additional drilling, additional metallurgical test work, additional geotechnical work, so we minimize the risk. And by doing that, if we get a better handle on the models, that reduces the variability in our production from day to day and throughout the year, and that gives you the ability to deliver more reliably along the way. I just think it's the focus we've put on it and doing the reconciliation. It's getting back to the basics. I think in the heydays, as people were pushing for volume rather than the value piece, you're looking just for any additional ounce, no matter almost what it cost. So making sure you've got the rigor around your modeling process and you're going for the best value ounce rather than just any ounce has been what's driven that change. Well, I think what it recognizes the work we've gone through to really get Newmont performing well. Looking, from all of our operations, what we've done to improve our portfolio. We have the highest credit rating from a Moody's standpoint. When you look at our debt credit metrics with Moody's, the best in the gold industry, which I think also sets us apart. And we've done a good job of delivering and doing what we say we would for our shareholders. Great question. I think continuing to focus on the fundamentals, you've got to get those right going forward. Part of that is also keeping to a value focus if you're going to do well. I think all the miners, whether you're gold miners or iron ore or copper or coal, got focused on growth. And it's good to have an eye on growth, but you've got to do it profitably. And I think there was a lot of people listening to investors wanting to see what's the growth story, and people forgot about the need to deliver value along with that. And that focus on shareholder value is keen here at Newmont and going to be key with what we're focused on, and I think the rest of the industry's got to catch up and figure that out as well. A safe operation's always an efficient and effective one, and it's something that I've valued since I started my career 35 years ago as a frontline supervisor. You want your people to go home safely, and I think what's been neat to see is how people take safety away from just working, at the mine, and they take it home and the things they do there. It's not just something that starts and ends at the mine gate. Yeah, we have a number of leading indicators. We look at safety interactions as a key one, and it's one I personally participate when I get out to sites, and that's people going out and talking to people while they're doing a job, asking them, where could they get hurt, what are the things they might do differently, and just having a discussion. And what it does is raises awareness about what the person's doing, and it gets a conversation going outside of just the normal routine of doing a job. So how many of those safety interactions and the quality of those is one of the leading indicators that we use. Yeah, we log those and track the number that we do at each site and try to make sure we get out to see all the people in the process. One of the points I didn't make, Michael, and I think this is important, it gets back to the changes we've made over the last couple of years. We produced around 5 million ounces in 2015, which is the same as we did in 2012, but we did it with 27% fewer people, which gets back to the focus on making sure we're doing the key things we need to deliver value rather than just deliver volume.